All right. Hello, everybody, and welcome to Selfwealth Live, our pre-recorded edition this week. Because when this will be released, it will be tomorrow, Tuesday, the 24th of September at 12 o'clock at midday. Sorry, Australian Eastern Standard Time. Welcome, Jason. How are you today?
Hey, Rog, I'm good. I'm good. Looking forward to another show and looking at the charts because some interesting things going on. All-time highs in the markets and all-time highs are always interesting for like the psychology behind what people think about them. And so look, I think we should be pretty interesting today.
Yeah, fantastic, it's going to be good as well. The reason being pre-recorded session, or will be a little less for people to have to sit with us the whole time. Normally we go for about an hour and 15. I think we'll aim for about 45 today, just because obviously everyone will be watching a replay, so no chance to ask questions. But if you do have a question throughout this show, you can actually put comments obviously down below. You can also, I believe you should also be able to use the live chat function, so you can go and do that. And then I will review the show afterwards on Wednesday. If there's any questions that come out of it, I'll be happy to answer them in the next week's show when it goes live again. Apologies for not being live this week. Once again, that's my I won't be there tomorrow. So all right, but without further ado, Jason, can I get you to share your screen so we can share the disclaimer with people, please?
Yeah, so let's just have a quick look at that. So, of course, everything today is general commentary only, doesn't take anyone's personal situation into account. And the other important point is that I'm not part of Selfwealth. My business is Motion Trader. You can see all my details in the top portion, licensing, etc. And Selfwealth's licensing and such is below that. So again, everything is general commentary only.
Thanks, Jace. They say change is as good as holiday. So as you can see, I'm in the office today. Just say if you didn't believe that I work for Selfwealth, or I don't have any signage behind them, but I am in the office today for everyone. And I've got my business shirt on today as well, right? So ready to go and ready to analyze the markets for this week. As you say, we're going to start off with the ASX market. So if you want to share the chart, please. And then we'll go through a couple of general questions that I had from the previous show, which had come unanswered, and then we've got some tickers to analyze from the previous show, which we couldn't get to last week as well. All right, so let's start off with the ASX. Jace, how's it looking?
Okay, well, a new all-time high last Thursday, and really interesting because, like, you just think back a few weeks ago, just like say 6 or so weeks ago, and someone said, "Oh, look, the market will be making a new all-time high by September." I think a lot of people would have just said, "Look, that's just not possible." And but this is the thing with the stock market. Often, what doesn't seem possible is it can quite often play out that way. The stock market does a lot of the time, it doesn't do what people expect it's going to do. And all-time highs are a really interesting area because I think a lot of people avoid buying at an all-time high because I think they'll say, look, it's too late. The market's been rising. It's at an all-time high. It's too late to buy now. But the thing is, Rog, that's often not true because all-time highs often lead to more all-time highs. All-time highs tend to cluster and they tend to lead to ongoing momentum in the weeks or even months ahead. So just going through some of the key points to consider when we take this charting, we take in the overall structure that we're seeing. So firstly, we've got these rising moving averages. So this is a 50-day and a 100-day moving average, which we often have, which I almost always have on the charts. And so we've got these rising averages, and price is above the moving averages. And we also have several all-time highs this year. So you just look at like how the price action has gone this year, and it's not like the first all-time high, that was it, the market peaked. As we were saying earlier, all-time highs tend to lead to more all-time highs. That's what's happened there. And the other thing to note is that there's this well-defined series of rising lows and rising highs throughout much of the year. So when you look at all that, that's by definition a bullish structure. The other important feature to note when you look at this graph, look at all these pullbacks we've had along the way. So all these pullbacks since the low last October, they've all been followed by powerful rallies off the lows. Just look at these. They're all like these strong rallies off the lows. So for me, when I look at that, that's a sign that there's underlying strong buying interest to acquire shares, to accumulate shares on pullbacks. I know that a lot of people get fearful when a market is at an all-time high, and I understand that. It's just one of those human responses we get. We think an all-time high, it's like it's now too late. But when we connect all these pieces together, and that being the moving averages, the higher highs, the higher lows, price being above the moving averages, the series of all-time highs, when we combine all of that, I think the only conclusion we can really come to from that is that the path of least resistance is upwards. And yeah, look, at some point, of course, the trend will end. Every trend does, but the thing is, we don't know when. So until there's clear signs of a topping phase, and for me, that would be something to do with the price being below the moving averages and the moving averages starting to roll over. That's the sort of thing I'd be looking for in a topping phase. Clearly, we don't have anything like that at the moment. But until we have that type of setup, I think the play here is to approach this market from the long side. I would have liked to have seen some more consolidation along the moving averages over maybe throughout September, but often we don't get the perfect setup. We often don't get the price action that we'd like to see. So rather than looking for reasons to avoid the latest breakout, I think that the play here is to go with the momentum. I added some exposure last week. I'm not fully invested at this stage, but I'm actively looking for opportunities. And I think the odds do favour higher levels as we go into the back end of the year. And as always, though, I'm using those wide stop losses, wide trailing stops to try and see off the pullbacks when we get them, because we do get these pullbacks. Like, think of the pullback 6 weeks ago. If you had a nice wide trailing stop, that was a survivable event. So I'm using those wide trailing stops. And of course, these also get me out when conditions change, which invariably at some point they will.
Okay. All right. Well, yeah. I mean, it's like you said, it's looking good. Things are moving up, but we haven't had a real, that topping phase. We had a little bit at the end of last year, but since then it's all looked pretty good. Other than the small few days we had back a month ago or so. But yeah, it's looking good. And what about the American market then, Jace? What does that look like?
And just quickly before we go on, rarely does a market make an all-time high and then do an about face and head straight down. Often it's more like what we saw back in late 21 into 22, where you do get a period where you get an all-time high and then the market goes sideways, it starts to stall, you start getting price action below the moving averages, and you do get a topping period. Not to say it always happened, like we had the COVID crash, which was an all-time high followed by an almighty crash, but that's the exception, not the rule. More often than not, a topping phase takes time. So yeah, at this point, the momentum is to the top side. Now, S&P 500, and also a new all-time high in the S&P as well. And I think the question a lot of people are wondering is whether this is the start of a new upward phase, or is it going to be a false break and lead to another sell-off. I think the first thing we should do in these situations, it's the first thing we should do is assess what is actually happening now, not what we think will happen or what we fear might happen, but first just step back and get a clear understanding of the current setup. So what is this setup? What's the setup when we step back and we look at the S&P 500? And what we have, it's very similar to what we'll talk about in the ASX 200. Rising 50 and 100-day moving averages, prices above the moving averages. We've got a series of all-time highs throughout the year. And like the ASX 200, there's strong buying interest on these pullbacks. So that all comes down to being bullish price action. It's not how a bear market would typically start. That's what this is the sort of price action you look for when you have ongoing momentum. Now, that's not to say the market has to go up. Market doesn't have to do anything. Every bullish phase will eventually peak, but the odds typically favor the status quo. They favor that rising prices will lead to further rising prices, and that's what makes a trend. Rising prices lead to more rising prices. That is the definition of a trend. And what I think is interesting in the S&P 500 is, like, we've got the S&P 500 at an all-time high. And this is despite the top three companies, this being Microsoft, Apple, and Nvidia. The S&P 500 is at all-time highs despite those companies being below their respective peaks. So together, these stocks make up about 20% of the S&P 500. So what that says to me, what that tells me is the index has been hitting new highs without those key stocks driving the market upwards. So that suggests to me that the broader market is doing well. It's not just about what's the top three stocks doing. It's just a narrow rally led by a handful of big tech. To get this market rising, making new highs without those, it tells you, as I say, other stocks are participating. So I think I think that's a positive sign. I'll show you what I mean in that respect. So this is the S&P 500 on an equal weighted basis. So mostly when people talk about the S&P 500, they're talking about the traditional market cap index. But I think it's also interesting at certain times to really pay attention to what the equal weight's doing, because it's weighing the largest stock the same as the smallest stock. And what you see when you look at this is the equal weight has been making ongoing highs throughout the year, more so than the S&P 500, and this to me suggests that the underlying structure or underlying backdrop to this market is actually quite positive. We've also got those rising moving averages, the rebounds off the averages showing good signs of accumulation on pullbacks. I actually do prefer the structure of the equal weight. And I think it gives us a better gauge of the internal strength of the market. So rather than trying to pick a high like some people like to do, I think the play here is go with the momentum, and we still need to manage risk, of course, but I think the default position should be long equities.
Yeah, fantastic. Just a few months ago, I think that it was a little bit of the opposite of that. It was like those companies were carrying the highs that were getting achieved. So it's good to see the rest of the companies and people's confidence in those companies catching up and showing it's not just those few companies carrying it, right? So
yeah, that's right. A healthy stock market needs broad participation. It's not like a stock market isn't all just about 3 or 4 stocks. It's about the overall market. And so this is why I think it's such a good thing that we're seeing the equal weight making a series of highs since July, when the market broke higher. We've seen several highs since then. So broad participation is a good thing generally for a market.
Yeah, positive news. Has anything changed in our Hong Kong market?
Not really. We're seeing a bit of a rally in the Hang Seng, but at this point, there's nothing here to really get drawn in on. It's just whipping either side of the moving averages. It'll take time, I think, for this to establish some sort of a structure that we want to do something with. And when you look at the Chinese market, well, it just remains weak. It's still below declining moving averages. So look, by all means, this market could bottom at somewhere near here, but it then takes time to turn around. At this stage, I don't want to try and pick a low. I think that's a low odds game. I think the play is to step away, look at other things, look at markets which are breaking out, look at markets which are trending higher. Go with what's working rather than try to jump on something which isn't working in the hope that it's going to go up. And I think that's something a lot of people do. They'll rather than go with the strong stocks, they'll go with the laggards, hoping they'll play catch up. But often it's the case that the best stocks to be in are the ones showing that relative strength. They're the ones that are being bought, that investors want to put money into. So I'd leave these markets alone for now. I'm sure they'll be a great investment at some point, but it's just not at the moment.
All right, fair enough. All right, well, let's get on to a couple of the general questions that we've received from our viewers. Now, obviously, if you've got any questions for this replay, you can put them in the comments or just pop in the live chat if it's available for you. Don't forget also, if you're watching, like and subscribe if you haven't already, just to help us out with our numbers as well. That'd be great. But this first question is, Jason, what is the extra criteria for narrowing down your list if you've got a big list of stocks to choose from, or any list that you might get?
Yeah, well, it's an interesting question. So the ASX has about 2,000 stocks, and to narrow their choices down, a lot of people will focus on the top 50 or the top 100 or the top 200, and that's part of their screening process. But I think the problem with that is some of the best performing stocks tend to be outside the ASX 200. So if you're prepared to look for stocks which are beyond the big index, and this is one of the great things about being a private investor, we're often moving smaller amounts of capital around, so we can buy some of these stocks which a big fund wouldn't really be able to look at because they just can't get the volume. But for most private investors, that's an advantage a lot of the time. And so what I do, I'll scan the whole market. I'll scan the top 2,000 stocks. And this is what I'm doing with Motion Trader. This is what Motion Trader does. We scan the entire market, and that can, depending on market conditions, it can produce quite a few signals. And of course, we can't invest in them all, so you often need to then cull it down somewhat. So this will be different for everyone. Some people will prefer larger stocks, some want smaller stocks, some want resource stocks, dividend stocks. There can be different criteria people generally look for. Some people, when they they might get 10 buy signals from momentum scans on a given day, they might then, some people go and use their own technical filters, put it through the 10 stocks, or they might use fundamental filters to zero in on the ones that suit them. My own way of doing it is I avoid the signals for the top 350 stocks. So I'm taking the largest out and I'm focusing on the smaller stocks. This works for me, won't work for everyone. So that's the first step. So I can remove a lot of signals that way. And then the next thing I'll do, if I've got competing signals on the same day, I simply take so I've got 5 signals. I'll take the largest stock within those 5. So it's a mechanical process. I don't go through and make a discretionary decision. So this is how I'm able to backtest things, because there's no discretion when you backtest. You just got to have hard-edged rules which can then be followed repeatedly. But look, there's different ways to do it. Mine's entirely mechanical like that, but there's nothing wrong. I've seen some people use fundamental analysis, combining that with scans to good effect. I've seen others do their technical overlays with good effect. But the big thing is, got to remember, there's 2,000 odd stocks, so there's almost always going to be more than 1 or 2 stocks which is doing something interesting. And this is something I get told by people sometimes. I say, look, you've given me 10 stocks. What am I meant to do with that? And it's like, well, okay, I've given you 10 stocks, but there are 2,000 stocks on the ASX. So it really has been narrowed down substantially. But at some point, everyone's got to make that final decision about where they're going to position their money. And this is also where many relatively small trades can be a good way of managing it. So it's not always about just choosing one stock, spreading capital widely, having a larger portfolio. So you're not just trying to pick the one best stock that's going to shoot the lights out over the next 12 months. You might have a portfolio of 20 or 40 stocks, or even more in some cases. So different ways to do it, but yeah, there is decisions that do need to be made.
Okay. And just for clarity for the way you refine your list, when you say you pick stocks outside the top 350, that's based on their market cap, is that right? And then
yeah,
if you have 5 stocks competing, whatever the biggest in market cap, that's the one you're going to go for. Is that right?
Yeah. Yeah,
Yeah.
that's what I do. Because you've got to come
Right.
up with some, like someone might look at, like I back tested various ways of making that selection when there was only capital for one stock and there were multiple choices. I looked at doing RSI or doing volume, or looked at various things, other indicators you could look at, and none of them really gave an insight to what that stock might do over the next course of the next year or two. So I just went, look, just go with the largest of those stocks. So a decision can be made, and it's repeatable process which I can then back test. This is a big thing for me, being able to test a strategy, and I can't test a strategy if there's going to be discretion around every single entry.
Yeah. No, that's good. It's good to have, good knowledge to have. And obviously, if you don't know market capitalization, you should be able to find that on any platform. It'll say it there. It's just basically the number of ordinary shares multiplied by the share price at the time, right? So it's always ever changing. So it should be a pretty easy number for people to get off any platform.
But there's no magic. There's no magic in what I just said then about my criteria being taking the largest of the stocks. It's just a way of putting a criteria which can then be followed repeatedly. Could take the smaller stocks. Could take the middle stock. I think you'd get similar outcomes over time. It's just having a consistent rule for making that decision if it's going to be completely systematic. But then some people won't be completely systematic. They will use discretion, and they'll use some technicals or some fundamentals, or they'll have, or it could be sectors or dividends. There's all sorts of ways. You just got to think, what do you want to achieve, and then work out a process to help you achieve what your goals are.
Yeah. Exactly. And how do you identify these high momentum stocks, Jason?
I'm using those moving averages. I'm using the 50 and 100 day moving averages. When prices above the averages, it goes on. A stock is in play. It's a potential trade, and I use a 70-day high. A stock needs to be at a 70-day high, because often you'll find times where a stock will cross above the moving averages. I'm just looking for an example on this chart, but I can't quite find what I want. There'll often be times when the moving averages cross, and a stock rallies a bit, but then it comes back and it starts to trend sideways or lower. It doesn't actually go on to do anything much. So I've got like a double check. So it's like the stock is above the moving averages. The moving averages have crossed, so the 50-day is above the 100-day, and then the other criteria is a stock is at a 70-day high. So that's just an extra confirmation for me that momentum is to the upside. Now, 70 is not a magic number. It could be 50 days or 80 days, but it's just an extra cross check to show there's immediate momentum in the stock. Momentum can still stall, but that's what I'm doing. That's how I'm narrowing it down. If I was using 10 and 20-day moving averages, I'd have a whole lot more signals. So the 50 and 100-day moving average, the slower moving averages, they help to reduce the number of the signals as well. Nothing wrong with having a whole lot more signals if you've got the capabilities of or the interest in going through them all. But if you want less signals and less false breaks, well, then the slower moving averages can be a better way to go.
Yeah. All right. Well, good. It's great learning a little bit more about how you do things. Obviously, the viewers can do the way they want to. Now, I know that you have yours identified by special software that you run that allows you to create these signals per se, or the stocks that you're wanting to look for the day. I know you could potentially do it via the stock screener here on TradingView. Now, I'm not going to ask Jason to go through that because I know he doesn't do that. He's not the expert there, but certainly you could go into that stock screener and do a filter for, ASX stocks with moving average crossovers and also potential highs, whether it be a 30-day or 50-day or whatever highs. You can have a look at that yourself for sure. All right. Otherwise, I do encourage you once again to go and check out, if you want to know a little bit more of the nitty gritty about, Jason's high momentum strategies. He lays it all out there, and you can pretty much download it for free from his website, motiontrader.com.au. All right. So, all right. Thanks for that, Jason. We might move on to there's some tickers that we've sort of missed from last week's show. Now that's what I've got. Are you happy to do that now, Jace?
Yeah, let's do that, Rog.
All right, so let's start with ANN. This is a few that we missed last week because we had so many come through. ANN, N for Nelly, double N.
Oh, N was it?
ANN, so double N.
Oh, double N, sorry. Yeah. Right. Well, this has been trending nicely. Yeah. So this is a motion trader stock as well. There's been several signals for this. You can see, while when it's trending below the moving averages, I don't want to know. It only becomes a potential stock when it's above the moving averages. Doesn't always see follow through momentum, but I find the odds of profit are increased when you're buying something which is rising, not when you're buying something which is falling. So looking at this now, we've got we've flipped from being below the averages to above, had a period of tracking sideways along the moving averages, another breakout, another sideways move into the averages. I really like when we see these periods where we just get an initial run and then you get a sideways move into the averages, because often it does set the stage for another break higher, which we've had. So I'd certainly be keeping this one in my portfolio if I had it. I'd be letting the profit run. Just thinking like, yeah, look, if it's it meets the criteria for an upward trend. So it's a stock which could be bought now. It is getting a little bit stretched above the moving averages. I'd probably prefer to wait for the next consolidation, see what that looks like in terms of getting on board if I wasn't already there. But yeah, the trend is nicely upwards.
Okay, fantastic. Let's have a look at CHN, please.
So this has been a one where people wanted to try and pick the low on this for ages, and it's been a losing game. It's continued to decline below these averages. Had a couple of just over the last year, there've been a couple of strong upward moves, but then they've given back all those gains. Now we're getting another upward move now. For me, the moving averages haven't crossed yet. They're close to crossing and prices above the averages. So something could come of this. This is one which is worth watching. Like just looking at the lithium and rare earth stocks generally, it's they do look really bombed out, and I've been watching them for a potential play. Like I think it's for me, it's a touch early. Just let's see, like from current prices, how far is it? Like, yeah, I was going to say one play could be buying at current levels and having a stop below the recent low, but that's 32% away. It's getting a little bit too far. I'd probably wait and see what price action we get over the next few weeks. Do we get one of those sideways moves into the moving averages while the averages cross? In which case, then it could be a case of buying the breakout and having a stop below the 100-day moving average. So I think there's a potential play in this in the makings. I'd probably rather watch it for a little bit longer, because look, it could turn out like this one back in May, where it all looked like maybe it's going to get going. But if you were waiting for the moving averages to cross before buying, you could have avoided getting in and having to suffer the decline which came afterwards. So I'd prefer to hold off at the moment, but very much an interesting one to keep an eye on.
Okay, thanks for that. Triple T.
Yeah, this is a stock which had been trending nicely. Just get some more data on it. Yeah, it had a lousy period, didn't it, where it just didn't do much, just declined for a number of years. Now, if I'd bought early on, so the moving averages have crossed. If I've bought somewhere, you know, somewhere in this period here, I'd probably still be long. This is quite a deep pullback now. So let's just see how much that pullback is. So that's 55%. So if you're using an ATR-based trailing stop, which is taking a stock's volatility into account, that might still be. Let's actually do that. Let's just put on an actual calculated stop rather than speculating about it. So now I just need to adjust the settings on this, make it a wide stop, because the default setting's only for like a multiple of 3. I use a multiple of 10. And this isn't the way I calculate the stops for Motion Trader either. But it's similar. It gives a general idea. Yeah, you can see, like, if you're using a wide average trading range method of calculating your stop, the stop's still a long way away. That bothers some people, but that's the calculation. That's what it is when you're trading these volatile stocks. And it's like a 12-cent stock, and so that's why the range is so wide. If this was in my portfolio, I'd continue holding it for now. I wouldn't be buying it here because it is dipping below the moving averages. It is potentially getting vulnerable, and with these low price stocks as well, Rog, they can look quite exciting for a while, but then they can give back all their gains. So you just got to be careful with them. Like maybe the play with this would be, a stop loss could be a bit below the recent low from last week. Maybe it could be around 8.5 cents thereabouts. That's where I'd start getting worried that this decline is going to continue to ebb away. But yeah, it'd be a hold for now. Only just. Certainly wouldn't be buying it as it's pulling back below the averages.
Okay, fantastic. Next one is ALIII, please.
Yeah, so unlike the Triple T, which we just looked at, this one's so far, it's against another low price stock, 15 cents. This one has found support at those moving averages and having a rebound. Like a lot of these low price stocks, they're volatile, they spike upwards, and they don't deliver. They ultimately give back all their gains. That's probably more the norm than the ones that go on to great gains. So you always got to be careful with them. Sometimes you can make a good gain fairly quickly, but you don't get those big ongoing trends. And I don't know how this one's going to play out. If I was in this one, like, it's a hard one to get into as well, because I wouldn't have been buying it when it was below the moving averages. And like, goes to show the moving averages aren't magic. They don't identify every opportunity before it takes off. The moving averages didn't cross until the shares were up at their up at highs. And this is where the 70-day rule comes into effect. So I was looking for an example. I couldn't think of an example earlier, but you can see the oh, actually, no, that's not going to give me the example I want. Actually, just don't worry about that. But yeah, now just looking at this one now, if I preempted the breakout and I was long, maybe it's a case of continue to hold it. But this low from August, from late August, it's probably below there. I'd probably be closing it out. Because, as I say, with these ones, the risk is that they do the gains are fleeting, and then they spend a long time just grinding lower again. So I don't think I wouldn't. If I liked it for some reason, I really liked it for some reason, I wanted to buy it. I guess it could be bought at current levels with a stop below the previous low. It's about 28%. It's getting. I don't think that's a high reward trade either. So yeah, look, it's probably not a play for me, Rog.
Yeah, right. Just off the back of that, in terms of low price stocks, you said you had a sort of you filter out the top 350 companies by market cap. Do you have a filter for the low market cap companies at all? Or?
I have a volatility filter is the main means of filtering the smaller stocks. So a lot of these low price ones, I'll jump, say it could be trading at 2 cents, then it jumps to 5 cents, and that's like it's up like what 150% in the space of a few days perhaps. So that's too volatile. So that's a filtering mechanism, the volatility that tends to take out all the what we know as the what we call the penny dreadfuls, the ones which are like a few cents and they're just too volatile. And so volatility is what filters those out. In reality, like I'm scanning the whole 2000 odd ASX stocks, but really the bottom 1,000 or the bottom 1,200 maybe will never turn up in the scans because they're just sitting on the bottom, grinding along the bottom, or they're just jumping around between 1 and 3 cents or something, and they're too volatile, so they just get culled. So that's another way to narrow down the numbers. Some people like to look for those ones. You can get some low price stocks which really have really nice structured setups, but you probably got to go through and actually cast your eye over the technical structure of those as well to try and weed them out from the ones which are just trouble.
Okay. All right. Well, we've got one more here from last week. Let's have a look at MP1, please.
Yeah, so this is a no. We've got the declining moving averages, prices below the averages, and it's making a new low today. So I think this was a motion trader stock. I think it's already hit the stop loss. I wouldn't be buying. It's not the sort of dip I want to buy. I don't want to buy when prices below the averages because that can continue for some time. Yeah, look, unfortunately, I don't think this is where I'd want to be at the moment.
All right, fair enough. You got one from me here. What about SGI, please?
Well, this is going nicely. Yeah, look, the trend's up. If I had this one, I'd keep holding it. Like it's a harder one to buy because you go, look, where am I going to put my stop loss? Do I put it below the 100-day moving average? That's a bit over 30% away. It's just getting a bit wide. I'd rather wait for the next consolidation, see what it looks like, see whether we get some boundaries around that we can play off. But if I had it, if I was buying this early breakout when we had the moving averages crossing, yeah, I'd be letting it run, see where it goes.
All right. Then actually we've got a couple more I'm gonna ask you to choose before we wrap up, I reckon, for today. Let's just look at SHJ.
Yeah, this is an interesting one. Must have been looking at this for something else at some point because I've already got the overhead resistance drawn in, which it's recently broken above. It's yeah, so this looks like a basing period between from March 23 through to recent times. It looks like a basing period. Price has recently broken above the top of the previous range, and we've also got these moving averages crossing to the upside. So I think this is a potential play. And you think, where would a stop loss go? It's about 15% lower, below the 100-day moving average. You could have a stop loss, and also below this this spike low from mid-September. So I think this has got asymmetric upside potential. So relatively small amount of price risk to, like, could it get back up to its highs from 21? I think it potentially could. So I think the upside outweighs the potential risk.
All right, fantastic. And we know how good. Oh, sorry, go.
And this is a sort of structure I like to look for. I like these structures where they go from below moving averages to above the averages, start to turn higher. You can get some really nice asymmetric plays that way, where you can be saying, like, by asymmetric, I mean where you say, like, risking 1 unit, you got 1 unit of risk to maybe 3 potential units of upside. So if you've got this skew towards profits, if it runs, very much opposed to when you're buying stocks which are trending lower. Then it's like, it's more. I find they're more risk than upside, unless you pick the ding dong low, which most people don't do. Most people buy the little dips, see a bit of a rally, and then they get more weakness. This is the way I like to play them. Buy them as they're turning around, getting above the averages.
Yeah, glad we showed you a good one there. Let's have a look at finally SBM. Now, this is something that one of my clients alluded me to, and I think it's a bit of a gold stock, and we all know how good gold's going at the moment. But is that playing into this stock?
It's got the makings of an uptrend. So we've got this series of rising lows, rising highs. Price has been breaking higher, moving averages upwards. Yeah, I think it's like the thing which worries me about this. So it's a gold stock, and like, look at its share price performance. That's not really correlating at all with the gold price. So in these situations, I wonder, like, does it have like a low mine life, or what's the issue? It's we're talking earlier about, like, people wanting to buy the laggards rather than the stronger plays, thinking the laggards will play catch up. But sometimes the laggards just don't catch up; they continue to lag. So maybe I think there could be better gold plays than this one. I wonder what the problem has been. But saying that, it can be, yes. Just look, say it was bought at current levels, a stop below the low from September, maybe 25% of risk. Could it double? It could double. So it's still asymmetric. But yeah, that's my concern with a gold stock that has been in decline despite gold hitting all-time highs for much of the year.
Interesting. All right. Thank you very much, Jason. Just a reminder that anything we say or do in this show is of general nature only. As usual, make sure you please share the screen again. That's a bit. Don't stop sharing the screen so we don't double up. So make sure you do your own due diligence around the show. This is a replay once again. So please like and subscribe either way, and don't forget to visit me over at selfwealth.com.au. And if you're not a client, obviously you can sign up and get 10 free trades with a link down below, or you can go over to Jason and try out his jasonsmotiontrade.com.au and see all the education he gives you basically for free, and see what it's all about on his side. Thanks again for joining me on this pre-recorded session today, Jason.
That's
sure
been
to see
good.
you next week.
That's been good, Rog. All worked out well, and back next week for our usual live show.
Yes, that is. I'd be expecting you still to be back if Sydney win the grand final for you, Jason. All right. So
go those Swans.
Go the Swans. All right. All right. Thanks, guys. Thanks everyone for watching, and we will see you again next week. Take care. Bye.